And we're no longer just in a free market mechanism where you say our markets will be markets, because maybe they don't want to do what you want them to do. Maybe they don't think it's for what you think it's for. And so that starts taking us to a very different world. And that world I've also described as the shift from economic policy, which is one that markets do understand, where you focus on inflation or the budget deficit or something very boring and technocratic like that. And instead, you move to economic statecraft, which is a thousands of year old tradition of statesmanship, or king or queensmanship, as they used to call it, where basically you would run the body politic, and you'd have to think how to keep your society together, stable, united, strong, in control of things in a violent zero-sum world, which is increasingly what the world around us looks like.
On this episode of the What the Finance podcast, I have the pleasure of welcoming back Michael Every. So Michael is the Global Strategist at Rabobank. So Michael, thanks so much for coming on the podcast today.
You're very welcome, and I'm glad the technology is now working.
Yeah, touch wood. I'm not going to talk about it any further, but hopefully we'll be able to sort it out. Yeah, there's lots of news happening. Obviously, Liberation Day, I think that's when we tried to record previously as well. That's really shifted the macroeconomic sphere and geopolitics and everything like that. But yeah, I'd really be interested in hearing your current take on what we're seeing in the world.
Well, it's chaos out there in the background as we speak right now, because just a few minutes before we started talking, leaked details have come out of what China and the US have agreed, talking for 2 days in Geneva. And basically, most of the tariffs that they've put on each other, not all by any means, but a lot of them have been slashed for 90 days. So effectively, having been at the point of virtual trade embargo and everyone calling a recession coming up ahead because all goods flow effectively was ceasing between the two. That was the narrative, even if it wasn't completely true. Suddenly now everyone's declaring that this is a complete end to the trade war and that the US has folded. Now, we have to wait and see. We need the press conference from both rather than just the Chinese details in particular, which is what we've got first. The US will be doing that shortly. But my initial thoughts here are as follows. If this is the US just folding like a deck of cards, then I don't know what the rest of the Trump administration is going to be for, because the centerpiece of their grand macro strategy and all the economic statecraft they've been using has been completely focused on China. And in fact, everything you'd seen in the build up to it, including the trade deal that they'd just done with the UK, which was about separating the UK from Europe and keeping Chinese investment out of the UK, completely fitted in with that picture. So if they've folded against China, I'm not quite sure what they're doing. If, on the other hand, as I suspect, what this is a tactical recognition of the fact that they hadn't planned as well for it as they thought they had, that there genuinely was pain coming up for consumers who were about to face shortages on shelves. That was going to be imminent and real sticker shock for some things. And so therefore they have to do what they can to try and ameliorate that in the short term. Then this is what you would call a tactical shift without any change of strategy whatsoever. And until I see otherwise, that is still my firm conclusion that both China, which had already removed some tariffs on the US anyway, there were waivers for a lot of key products they needed to get. And for the US, which hadn't really had many waivers for China, they can now take a breath, use the next 90 days to buy as much as everything as they need, and then carry on. And the parallel, as I was just telling people, is very much with Russia-Ukraine, where all the talk in the background is when do we start having peace talks or ceasefire talks? And allegedly, it will be next week now. And yet anyone who thinks that a ceasefire is the same thing as genuine peace between Russia and Ukraine doesn't understand anything about what's going on. If we get a ceasefire between Russia and Ukraine, that is again an indefinite period in which both sides will rearm like mad because they're currently exhausted and need the break. And the same is true here, I think, with this, what is now breaking news between the US and China.
Yeah, it is really amazing. Do you think it could just be, if Trump had said everyone gets a 10% tariff, the markets would have freaked out, everything would have gone to the free fall. So basically what he said is everyone's getting a 100% tariff, and now he's walked it back and markets are sort of slowly going up and probably will be today, be majorly in the green and potentially close to all-time highs. Do you think it was sort of a strategy that way, that just a way to slowly, shift towards this tariff world? Or it's still China focused?
No, I think the strategy is still completely on China. I think it's a tactical move, as I said, not a strategic one. If they thought about this strategically, they would have, for example, said, we're going to have 145% tariffs on China, but they're going to start at a year from now. So everyone buy everything you can, stock up, and then things will get rough in a year. Or they could have secretly sent that message to people. And actually, pre-Trump, that's exactly what I was suspecting they would do, because it's a better way to handle it rather than jumping straight in with a knife between your teeth and expecting that you're going to win a battle like that. But as I said, people who want to see this as having a complete lack of strategy will say that Trump has folded. And I'm sure you'll see lots and lots of memes along those lines. I very much doubt that's the case, because, as I said, nothing else he's doing now within the whole rest of the sphere of statecraft makes any sense if you don't have that as the central pillar. So hold on to your hats, fill your boots, because if you can now get stuff you're going to need that you can't get 90 days from now, buy as much of it as you can right now, stock up, and in the meantime, do everything you can to look at alternative supply chains, because this will come back.
Yeah, and it'll be pretty interesting, because if we look at the impacts of what this had on Q1, US economy shrank, but that was really just because there was this massive influx of imports, which sort of skewed the measurements, and it was quite strong consumption as well. So I'm assuming you assume that's going to happen in Q2, and I guess even now it's going to go into Q3 as well.
Yeah, quite probably. I mean, it's logical that the import side will have to respond to that, because the only way that you wouldn't do that is if you're absolutely sure, as a business person, that this is over, that there's no way that this will come back, and that you can be 100% assured that your supply chain will be stable going forward. And I really don't think that's realistic. The only way that could have changed is if, and we won't find this out, I would imagine, for a long time, or if we ever do, there's been a genuine change of heart on the Chinese side to say, yes, our economic model is not sustainable. We recognize we can't export to the whole world. We have to consume much more, because the US has made it very clear they will not put up with the large trade deficit with China. They're not doing everything else that they're doing across the spectrum, including putting port taxes on ships coming in that are built in China, etc. They're not doing this for no reason. They're doing it to restructure the US economy away from China. So you would have to be desperately naive or very short-sighted to think that this really is anything other than a tactical opportunity to ameliorate some of the genuine pain that was looming as part of a longer battle.
Yeah, maybe we can take a step back, because I know this is something that you've been talking about quite a lot, this longer battle, this shift in the world, and sort of where we're going. So maybe, because I think we did our interview, almost 2 years ago, so quite a long time ago, actually.
Oh.
Yeah, crazy to think, but it'd be interesting, if you can maybe lay the groundworks for people who weren't able to listen to that.
Sure. Okay. Well, let me give you a very quick repeat of what I've been saying loudly and insistently for quite some time now. So the first point is that you need to be asking yourself, what's GDP for? That's a key question. If you don't know what you're doing and you think GDP is just GDP, then you're losing, because other countries have a firm vision of what their GDP is for. It's to achieve certain targets. And the West needs to wake up and realize that. And I believe that the US is, even if Europe is, thrashing around, slowly getting there. The UK, not so much. Australia, not so much. But the US is. So once you've got that vision, what is our GDP for? What does it need to look like? What are we trying to achieve, both domestically and internationally? Then you start deciding what you need to allocate resources to. And we're no longer just in a free market mechanism where you say our markets will be markets, because maybe they don't want to do what you want them to do. Maybe they don't think it's for what you think it's for. And so that starts taking us to a very different world. And that world I've also described as the shift from economic policy, which is one that markets do understand, where you focus on inflation or the budget deficit or something very boring and technocratic like that. And instead, you move to economic statecraft, which is a thousands of year old tradition of statesmanship, or king or queensmanship, as they used to call it, where basically you would run the body politic, and you'd have to think how to keep your society together, stable, united, strong, in control of things in a violent zero-sum world, which is increasingly what the world around us looks like. So when you shift to economic statecraft, you start to see things being done very, very differently. And to give you another example, which has just broken in the past few hours at the time of recording. So President Trump has also said that today he's going to sign an executive order to bring down the price of pharmaceuticals, or drugs, as the Americans call them, 30 to 80%, which is a staggering move, which will, of course, create havoc in global pharmaceutical supply chains. But it will make them cheaper for Americans if he can do it, and it will make it more expensive for everybody else. And that's obviously zero sum. That's obviously economic statecraft, because there's no way that's about markets. That's about telling markets, you're not producing an outcome that we want you to produce. We want to have the social outcome of healthier Americans and better off Americans, which means they're spending less on medicines. So if that is to happen, the rest of the world gets a kick. America gets, a tailwind behind it rather than the headwind. And equally, linking things up, you start saying, well, actually, that puts more money in people's pockets if some tariffs remain on Chinese products and some goods from China are now more expensive. At which point, well, at least it's counterbalanced by the fact people have got more money to spend. So you have to start, as I said, understanding what's GDP for, what's your grand strategy, or I call it grand macro strategy, where you no longer look just at macro numbers, but you think about how they fit into the grand strategy of your politics. And then what do you need to line up to achieve it? So that's a summary of what I've been arguing now for the past couple of years, which perfectly predicted everything Trump has done so far, if you could presume it's all about China. And I still stand by that.
And would you sort of link the BRICS into that sphere as well, or is it mainly focused on China?
Well, no, the BRICS are in it too, in that sides are going to have to be taken very clearly. If you're going to try and take on China, you need to create a new trading alternative without it. And so terms are being put to every trade partner the US is negotiating with. Will you be in our bloc, or will you be in China's bloc? And that isn't going to go away. Now, maybe that's temporarily put on hold, because if you're someone else who is about to sign a trade deal with the US, on one hand, maybe you accelerate now because you suddenly think, oh, I might miss the boat. They might go back to China again. That's possible, but unlikely. On the other hand, you start to think, well, no, if they are going to have to move away from China at some point, okay, what does another bloc look like? Who's in it? Who's the fulcrum? Now, India is being spoken about, Vietnam, for example. All these are very likely. And the US will be reaching out to many of them, and of course, lots of them are in BRICS, and saying, how close do you really want to be to China if we're freezing China out? And how close do you want to be to us? And that with us or against us strategy, I can assure you, will continue to unfold, regardless of what rhetoric you hear from people. For example, the US today is saying, we don't want to decouple from China. Yes, they do. That's evidently clear. Maybe not in every product, but in all the products that count. And that's a lot of products.
Yeah, okay. Yeah, it is amazing to see. And I think it's quite amazing to look at Trump and how he's basically hostile taking over the Republican Party, because you think about everything he's doing, it's very, you'd say it is very socialist, but it is that grand strategy of trying to do what's, I guess he's going to say, it's do what's right for the people, but I'm sure a lot of people disagree with that.
Well, look, I mean, every political party's got different factions, and clearly Trumpism has taken over the Republican Party, but that doesn't mean there aren't, alternative views within it, although we know what the MAGA types call them, rhinos, Republicans in name only. That's true in lots of different political parties, as I said. And in the long run, I think the key point is this. Were you to presume that at some point there'll be a pivot away from Trumpism, which people are discussing. In fact, some people are banking on it. They think that they don't have to do anything during this turbulence, because in 18 months he'll be defeated in the midterms, and in another 3.5 years he may not be the president, and whoever comes after him might be a Democrat. First of all, that's a very long time, and secondly, that's a very big bet, because you have to presume there's an alternative ideology which can explain things to people better than what Trumpism is doing. Now, if he can manage to ameliorate the risk of any recession, or reduce the risk of a recession right now by this tactical shift to stock up on things again before the trade war starts properly, who's to say that people will vote for something different? Because you'd have to make the case that more free trade is good. Now, people used to be sold that really easily. More free trade was the benchmark ideology that used to sell in the US. It isn't anymore, because people recognize it comes with side effects like deindustrialization and unemployment and inequality. And so provided that Trump can start beating that drum and saying, look, you intervene with markets, lower farmer prices, etc., it's going to be a very tough act for any political party, within the right spectrum, which is a Republican Party, or on the left, the Democrats, to say, here's a cohesive alternative ideology which can tick all the boxes that you want to see ticked without any side effects. And it takes a long time to establish that kind of coalition and that kind of ism to say, this is what we believe, we're allowed to do this and we're not allowed to do that. And we're currently going through this period of flux where Trump has managed to create one by a process of accretion, very much looking backwards. A lot of it's very, very old ideology, actually. And there's no real alternative at the moment. But everything's fluid. So we'll see where we are in another few years.
Yeah, especially on a tweet, things can change very quickly. So I think that's the challenge that we're facing currently. I'd be interested to talk more about free trade, because I guess the challenge has been, people, as you said, people have been very for free trade over the past 40 years. It has increased GDP of many countries, but it has also increased as well, divide, deindustrialization, etc. And I guess a lot of people would say that maybe it's the fact that it wasn't true free trade because China was, basically engineered its own economy. So I guess that it wasn't really fair because it wasn't proper free trade because their whole economy state subsidized. Would you agree with that, or is that just the way, that's just states craftsmanship, that's just the way that the world moves?
No, I think that's a very valid criticism. And in fact, I've just finished writing a paper, which I'll be publishing imminently, arguing again, because I've raised this point many times in the past, that free trade theory itself is flawed. Let's take the founders of it: Adam Smith, David Ricardo, for those of you who remember your economics lessons. So Adam Smith said that, it's silly to try and just accumulate gold and silver. If your neighbor does well, you do well, because you both trade more together. And that mercantilism, which is a word I'll be referring to again in a moment, which is the opposite of free trade, is not the way to go, because mercantilism was the way we'd always done things for thousands of years, up until Smith came along with this idea. Now, the problem is Smith himself actually advocated for protectionism for national security. And he said, if it really helps you, in areas of national security where you can't rely on foreigners, yeah, you should still have protectionism. He also was in favor of reciprocal trade. He openly said, if you slash your tariffs and someone doesn't slash theirs, well, maybe you should put yours back up again. So people don't like to report that about him, but he did argue those completely. And then if we move at the same time to Ricardo with comparative advantage, which is you make one thing and specialize in that, I make another thing and specialize in that, and then we just trade them together. That works mathematically, that works logically. The problem is Ricardo himself said it only works if you don't have mobile international capital, so that you can take all your money and all your technology from one country and move it to another. Because if you can, you'll just make everything in the cheapest country, and then everything doesn't clear. And so you have to ask yourself, if we live in a genuine Ricardian Smith world, you have to have no national security issues and trust everybody. Well, that's not true. And from a Ricardian perspective, whenever you look at the trade between two different countries, with the exception of someone like Saudi Arabia, which obviously is going to have loads and loads of oil coming out of the ground, etc., most people shouldn't run a trade surplus or a trade deficit. On average, you should have balanced trade, because you're producing X, they're producing Y, and in some combination, you just exchange them. Not bilaterally, but as a complex mix. That never happens. And it doesn't happen because some economies, and China is absolutely king of them, but there are plenty of others, Japan, South Korea, Germany, they all make sure that they suppress domestic demand one way or another, so that their economy grows on the back of exports, so that they run a trade surplus and the other countries must run a trade deficit. And that's mercantilism in various different forms. It's statecraft as well, in many cases, in China's case in particular, because they have a vision of what they want to do, which is to control supply chains, control industries, so that if you want to buy that product, you can only buy it from China. Power comes with that. That's entirely what the philosophy of mercantilism is all about. And so I've been arguing for years that when people realize that, they would move away from free trade, which is exactly what's happening. So China has not been a free trader. They export a lot. That's not the same as free trade. It may not be autarky, but it ain't free trade. And so the only response to that is to also move away from free trade. You cannot beat a mercantilist by saying, oh, I'll buy more. That doesn't work. It's like saying, I'll fight a war with pacifism. That also doesn't work out too well for you. Hence, we are where we are today.
Yeah, and I guess the currency as well has been another avenue that they've, as you said, reduced domestic demand by having a weak currency.
Well, that's one method. I mean, each country has a different. Some of them have weak currencies. Some of them suppress domestic demand with very low interest rates. Some of them have subsidies on everything. China subsidizes everything. there are, and yes, and some of them, as you go back to that again, the currency can be a prime vector. Basically, there are a lot of different tools that you can use. I don't want to go through them all because it's a long and exhausting list. But if you are doing that kind of thing, and particularly a combination of lots of them, you will export more than input. Fantastic. You can keep producing stuff and sell it overseas, and you can put dollars in the bank, and you have a nice big current account surplus and a big pile of reserves, and you feel safe. But somebody's on the other side of that. Someone's running their deficit. Someone's seeing deindustrialization. Someone's seeing money flood out of the country and having to borrow more to fill the gap. And so the system will break down. Absolutely. Keynes saw that at the end of World War II. Keynes proposed a completely different system, which we didn't adopt because the US was the big exporter at the end of World War II. So it didn't want to give up its power. Now it's the big importer. It wants to change things. Whoever is the exporter will never want to change it. Whoever is the importer always will. This is the human condition. But the system is breaking down nonetheless. And anyone who thinks it isn't didn't understand what the system was.
So it sounds like, is it the importers who are going to benefit in this shift and the exporters who are going to be affected? Or is that sort of too broad? It's a case-by-case basis?
Well, that's how it should work. That's how it should work. And that's exactly what the US thought would happen in this instance, and that China would be hit harder. What they didn't recognize, of course, is that China now dominates supply chains to such a degree globally that if you don't get it from China, you don't get it from anyone. So you suddenly go from saying, haha, you're not selling it to me, to, oh, well, I don't have any of X. Like, I don't have any of these widgets or products that I need. And without that, my whole supply chain collapses. So that's China's power, that they can control that. And the US needs to get away from that to the point where it produces at home again. And everyone can see that, both Democrat and Republican. Problem is, you can't get there without pain once you've allowed China to get to the position that it's in now. Ergo, to go back to where the conversation started, you suddenly get this tactical pivot to say, okay, that hurt too much to have the embargo right now. Let's have 90 days to allow people to take a breather. It's no different, as I said, to having a ceasefire during a war. Go and pick up the wounded from the battlefield, go and treat them, but then invest a lot of time and money in rearming and getting sure that you're ready for the round two, because it will be coming.
But then do you still see China being negatively, I'm guessing both countries are probably negatively impacted by the shift in the future, but is China going to be worse off?
Well, that's a really key question. If you're anti-US or very skeptical of the US, which I take a lot of people to be, then you'll say the US is so indebted, so polarized, so lacking in the ability to do things anymore, and so financialized. So all it wants to do is make money from money rather than making money from making things, that it can't ever go back. It's too late. And if that is the case, then the US is done. It'll take a long time to be completely done, but its hegemony will eventually crack. Its military won't be able to sustain itself, quite understandably, because you can't make things. You can't make aircraft carriers on the scale you need to, whereas China can. You can't make F-35s at the speed you need to, which China can with its J-10s. So, if that is true, yeah, you want to be very, very bearish on the dollar. You want to be very bearish on the US. You want to be very bearish on the entire West, because don't think Europe looks good in this environment. It looks terrible. Don't think Australia or New Zealand or Canada look good. They look terrible. It's terrible for the West, if that's true. On the other hand, you can turn around and say China is nowhere near as strong as it looks. The millions of people will lose their jobs from these tariffs. We estimated years ago about 22 to 25 million people would. That was a couple of years ago. Subsequently, we're seeing much more, high-level people come out, much more famous people than myself, I should say, not high-level, coming out and saying, well, it's going to be 16 or 17 million people. It's like, well, we got there first, and we think you're wrong. It's even worse than that. So they can't wear that very easily. No country wants to see that kind of level of unemployment, because that's just from direct manufacturing jobs. You add in the services jobs on the back of that, and it's an appalling figure. So what are they going to do? Well, they need to find someone else to sell to, but there isn't. There's no one else to sell to in a global system that was built on US overconsumption and everyone else overproduction. So logically, the producer should be hurt more. But it's not true if the consumer doesn't have any other alternative supply in the meantime. So this is effectively the mutually assured destruction that's in place. And the US needs to be thinking very tactically and strategically to get out of it. And I think we've just seen that demonstrated.
Yeah, and it does see, companies, I know Apple's trying to go to India, they're trying to sort of the friendshoring of it all. So it does seem like there's a shift, but as it's going to take, over a decade, you'd imagine, to move all the required supply chain needs and, you know, products to other countries?
Oh, totally. It's going to take a long time. It's going to be expensive. And of course, things will get in the way. I mean, for example, everything links up. Is it any coincidence that just after we've seen headlines like iPhones will be made in India, India gets dragged into a war with Pakistan? Now, if you think it is, you're probably an economist, because it's possible it is, but there's a much greater likelihood that it was part of a, you know, a convenient coincidence that suddenly you've got that geopolitics overlapping with what we call geoeconomics. And I would expect that everywhere where you see the overlap between geopolitics and geoeconomics, it will get unpleasant going forward, because there's so much money and so much power at stake in what we're talking about here.
Yeah. How do you see this impacting the markets?
Well, have you seen the markets this year? I mean, they're all over the place because they don't understand what's going on. When they do understand it, they're in denial because they don't like it. Today, I'm sure they'll be through the roof because of this this ceasefire, which they'll think is a complete peace deal. But they don't recognize the fact that we are seeing a strategic shift away from the way things were done, which is markets at the center of everything, to geopolitics, national security, economic statecraft at the center of everything, and markets being at the periphery. Markets being told, you need to do this for the greater good. And I go back to pharma again, where for decades, America has paid much higher drug prices than everyone else, subsidized by the rest of the world, effectively. Or the rest of the world is subsidized by the fact that Americans pay more. Sorry, let me express it like that. So Trump's now saying, no, those prices need to come down sharply in America, which means they'll go up everywhere else. So maybe the drug companies will be all right balancing. I'm not sure what the correct ratio is. I don't cover that sector. But it's entirely possible they'll just make less money. At which point, well, you say, okay, you make less money, but we need people to have cheaper drugs. That's not how, because markets, as I flippantly call it, works. Because markets says, well, we need to make more money, so therefore this. Economic statecraft says, no, we need to do this, therefore you make less money.
Yeah, and it does seem to have been, you know, if you look at the last 20 years, margins have just sort of, I don't know if it's 20 years or even 10 years, they've just rapidly increased, especially after COVID. So it does seem like there does need to be a normalization of company margins. As you said, that's probably negative for asset prices, stock prices.
Well, it's very volatile because in some countries you'll have inflation and massive surges in capital investment, and in others you'll have deflation, and you've got far too much capital investment because you won't be making as much stuff. So it's not a global response you're seeing, it's a regional or individual country one. There'll be winners and losers. Sectors that have done badly up until now will do relatively better. Sectors that have done well will probably do relatively worse. Currencies are the really interesting one as well, because depending on how you structure this change in your mind, you're either very bullish on the dollar or you're very bearish. And you're either very bullish on the renminbi or you're very bearish. You're either very bullish on commodities like gold and crypto, or you're very bearish. And you have to make an internally consistent narrative and a logical narrative to explain why one goes up and the other one goes down, depending on how this plays out. But only understanding how it will play out will tell you where they all go. So it's up to you to decide, but you can't just play them day to day and expect to get it right. You know, you have to have a view on what's really happening here.
Yeah, definitely. And what do you see happening in Europe? Because I guess they're trying to, you know, Germany's going to basically lean on their balance sheet to try and massively invest. I think they're trying to do that throughout the whole of Europe as well. Do you think this is going to work, or is it just too structurally challenged at the moment?
Well, look, we've got a collapse in the global security order. We've got a collapse in the global political order. We've got a collapse in the global trading system, apart from this 90-day reprieve. And we've got a staggeringly high level of government and private sector, by the way, debt almost everywhere, with massive fiscal deficits in almost every Western economy. And now we need to rearm because of the collapse in the security situation. And we need to invest for climate change, and we need to invest for, you know, social stability. Where's the money going to come from? How is this going to be done? You know, are we going to have to make guns or butter choices? And if we're not going to make guns or butter choices, are we going to be borrowing it again? And how, with interest rates being relatively high? Or are we going to be using statecraft to financialize our way out of it? At which point, you know, you create inflation. There are all kinds of different, really important structural questions that arise from this. And no one has a coherent answer except to say that going back to the way things were is not going to work. And that's a really key thing to understand. You can't just go back to the old playbook of cutting rates, pushing up asset prices, and saying because markets. It will not work.
Yeah, great. That's a great message. So, Michael, thanks again for your time and thanks for your patience. I'm glad we could finally.
You're very, very welcome. And yeah, IT is everyone's bane. I'm very glad we got there in the end.
Yeah, exactly. I'm very glad. But yeah, my last question is, what is one message? I think is that what you want to leave us with, or is there something else you want to leave us with?
Just ask yourself, and I keep telling everyone this, ask yourself, what's GDP for? Take a step back, really think about it, and then whatever you think it's for, go and do more of that or lobby for more of that.
Great message. So thanks again. If anyone wanted to find out more about your work and what you do, where would the best place for that be?
Well, Rabobank Knowledge, you can go and have a look there. I'm on LinkedIn, and you can also see my Twitter and or my X handle here. Happy to continue the conversation there because there's so much going on. There's a lot of conversation that needs to be had.
Yep, great. Definitely. I'll put it in the description below, but thanks again for your time.
Thank you. Bye-bye.
Hey everyone, thank you for listening. I really appreciate the support. If you've got value out of this, I'd really appreciate it if you could like, subscribe, or comment, good or bad feedback. I'm always open to that, but it really helps with the channel. As I said before, only about 14% of people actually subscribe to this channel. So if you were to that, it would really help. It could mean we could continue to grow. If not, thanks for watching and see you on the next show. And you also might like this video right here. All right, thanks again.